Thanks very much. So I'll hand over now to Ms Payne.
Thank you, Governor, and each of you for your time today and the opportunity to ask you some questions. I wanted to go to distributional impacts of the rate rises. And Governor, you indicated in a speech on the 8th of September that there's an uneven effect across the economy and that the Reserve Bank spends a lot of time looking at disaggregated data to understand that. So I was wondering if you could elaborate on that uneven impact on households and explain which data and how you analyse that.
Well, I might ask Brad in a minute to kind of touch on some of that, but just before I do, can I make a more general point about income distribution? The best thing for people is to have a job. So I know there's a lot of focus at the moment on the effect of higher interest rates on people, and I understand why that is, but a higher share of Australians have a job today than ever before. Female participation rate is the highest it's ever been. Youth unemployment's the lowest in many, many decades. People are getting the hours of work they want. They might have to work 2 jobs, but they're getting hours of work. So they are fantastic things for people's income and opportunity. And those things are the result of the monetary and fiscal response during the pandemic. So I know we're looking at the other side of this as interest rates increase, but we shouldn't forget that from an income distribution and from the perspective of welfare society, we're in a much, much better place than we've been for a long time. Sorry, that was I think it's kind of just important contextual information. I understand that everyone's very concerned about higher interest rates now, but we should be welcoming and celebrating full employment. And I don't hear enough, not you, but I don't hear enough in our society celebrating, welcoming full employment. Sorry, Brad, the data we're using.
Yeah, I mean, there's a whole range of metrics. In fact, Lucy's team has also, a bit earlier this year, did a deep dive into income and wealth inequality in Australia. So I'm not sure if Lucy wanted to speak to that in a moment. Maybe if I can just give a few quick remarks around what's changed over the course of the pandemic in terms of the distribution of, in particular, of savings. So as the Governor mentioned a little earlier, in aggregate, the country's accumulated actually a little north of $250 billion, but that accumulation of excess savings has not fallen evenly. The numbers that we monitor suggest that about 80% of that extra $270 billion has gone to the top 40% of households by income. That experience is not unusual by international standards when we look at the experience in the US, the UK, other things. Most of the run-up in excess savings during the pandemic went to higher income households, in large part because their consumption of discretionary goods, the ability to travel and do these sort of things was severely curtailed. So big aggregate increase in liquid savings, but most of it's gone to higher income households. Is the first point. On the wealth side, I just point out the aggregate increase in household net wealth in the country since the pandemic has been about $3 trillion. It actually dwarfs the run-up in liquid savings that we've seen. And again, obviously, a fair chunk of that has gone to higher income households. If I can just make one point about how we see some of the stresses coming down the line from a disaggregated perspective, because to your earlier point, yes, we look at the aggregates. It's been a lot of time we form policy on the basis of aggregates, but we are very, very attentive to how household finances are tracking at a disaggregated level. When we do scenario analysis, forward-looking scenario analysis, trying to get a handle on what sort of impact could future interest rate increases and increases in the cost of living have out to the end of next year, what we find is about 15% of borrowers are going to have their spare cash flows fully taken up by the increase in borrowing costs and the increases in the cost of living. Other households will have other margins of adjustment. They might be able to curtail consumption, discretionary consumption a little, or run down buffers, but about 15% of borrowers are not going to have any spare saving each month if the market path for interest rates and if our inflation profile is borne out. At the other end of the spectrum, about 1/3 of borrowers, both fixed rate and variable rate borrowers, are not going to have any increase in their payment, in their actual realised payments out to the end of next year. In the case of variable rate borrowers, it's because they've been prepaying to such a degree that even as interest rates go up, they're already servicing a mortgage at a rate that kind of can fully absorb that increase in interest rates. So there is a very uneven impact coming at us from both rising interest rates and rising cost of living. Lucy, if you wanted to give a bit more colour on the inequality
sure.
side.
I mean, in terms of the various data sets that we have available, of course, there's a Hilda survey that we have 20 years of experience with. The ABS contributes quite a lot of useful information on this, including the household income expenditure survey, or the survey of employment and expenditure and housing. We use surveys to get some colour on this. So some of the analysis that we've done on who ended up with the extra savings during the pandemic period, that was partly based on various commercial surveys that we have access to. So there's a range of different things. But I think the other point I'd make is the liaison. So in terms of how this is actually affecting people's experience. So we talk to all the retailers every month. And so, if the retailers that are mainly targeted at low-income earners are telling us a very different story to the ones who are perhaps more at the high end or in the middle market, that's telling us something. We also liaise with groups like the financial counsellors networks and the debt collectors. And I can tell you the debt collectors were bored during the pandemic because there was just so much support. An awful lot of the government support went to relatively low-income earners, and there were a number of people, particularly young people, who were actually receiving more income during the lockdown periods than they were when they were working. So these are all sources of information that we have.
Well, that's very interesting. So just to go to you mentioned the retailers targeting low-income consumers tell a different story. What story
if that were
are
to
they?
happen, I'm not saying that is what's happening, and obviously I can't talk about specific liaison contacts because it's all commercial in confidence, but the fact that we talk to all of them every month, some of the major retailers, and some of those have different target markets. And so if we were to hear the ones who mainly target lower income spenders, and if they were saying something very different, this is a hypothetical, if they were saying something very different to the ones who are high-end furnishings or much more discretionary, that's telling us something about where the impact of the various economic forces is lying. So we have a range of different information to triangulate, and that would be a very timely indicator.
Okay, thank you. I just wanted to go now to climate disclosures, and obviously the RBA have advocated for a clear climate disclosure policy. So I was just interested how Australia compares internationally and how our current approach to climate disclosure, how that impacts on the availability of capital for the transition to net zero.
Good question. Well, there are standards being developed internationally which the intention is they sit alongside the international accounting standards. There'll be international climate sustainability standards, and Australia's going to need to find a way to implement those here. And I think the government has a role to play there, and businesses also have a role to play. If we don't do that, we'll fall behind what international investors expect. So regardless of whether you think this is a good or bad thing, the investors want it. And if we don't do it, then they will be reluctant to invest in Australian businesses. So it's important that we keep pace with what's going on internationally, and we're working through the Council of Financial Regulators and with the government to make sure that happens. I think it's a really important issue.
Thanks. And could you comment on what the impact of the government legislating our climate targets will have on that? Well,
I think it was the legislature. I don't know enough about kind of the details, but the fact that Australia committed to net zero by 2050 was incredibly important, because I've had a lot of discussions with overseas central banks and investors, and they were always asking about Australia's commitment. And the fact that we had not signed up was people saying, well, are you really serious about this? We want this. Do we want to invest in Australia? So it was a question mark that was always being raised, and that question mark isn't being raised in discussions we're having with investors at the moment. I'm not sure whether the legislating it was kind of critical there, but the fact that we committed to it was important. And I think Australia has great potential here with clean energy. And we're now in a better position to sell that story and to execute it when we're kind of seen to be on the same path that everyone else was. When we're on a different path, people were kind of, well, are they really serious? And it was damaging us.
Thank you very much. I'll leave it there, Chair.
Oh, thank